Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Welcome to Reverse Mortgage Radio. Thank you so much for joining me today. You're lucky to be here today because we've got a very special guest. But before we get to him, I do want to let you know how to reach me. My name is Bruce Simmons, and you can reach me directly at 303-467-7821 or visit me online at reversemortgageradio.net. reversemortgageradio.net. If you have to leave once we get into this and you're really into the conversation, feel free to visit my website next week. Usually by Tuesday, my web guy has this podcast up on my website, and you can go there in the upper right-hand corner, click Reverse Mortgage Radio, and you can download the podcast. We're also, I believe, now on iHeartRadio, actually. So we're moving up in the world. I'm not sure. There's different places that we're set on, so I'm just not sure exactly where. But just real quick, before we jump into our conversation with our guest, I do want to give you a quick background and just a quick overview. If you're new to this and you're not familiar at all with what reverse mortgages are, a reverse mortgage usually is an FHA insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can use however you want. Any lien, any existing loan against your property has to be paid off either with the proceeds of the reverse mortgage, or you need to pay it down. Sometimes that's the case too if we can't loan you enough to pay it off. And that's how the system works, so that the reverse mortgage can be the only lien available on the home. And the nice thing is then you're out from under that mortgage payment. Now, you do have to continue to pay your own property taxes and homeowners insurance, maintain the home, live there as your primary residence, and keep your name on title. As long as you do those 5 things, you can never, ever, ever be kicked out of the home. The loan will never be called due. And as you continue to live in the home, no payment is due on a reverse mortgage. However, if you choose not to make a payment, because the payments are optional, but if you choose not to make a payment, that interest gets added to the loan balance. Over time, the loan balance grows. That's something you have to be aware of. And I tell all my customers, everybody I meet with, I tell them every month you get a statement in the mail, or you can go online and see it. But what happens is you'll see that loan balance getting larger and larger over time. If looking at that statement and that loan balance growing over time is going to cause you more stress than the benefits you get from the reverse mortgage, you should not do a reverse mortgage. Okay? You're not going to own your home free and clear, but you get the benefit of owning it free and clear. It's like you own it free and clear because no payments are due. If you owned your home free and clear, you still have to pay your taxes and homeowners insurance, thing of that nature. So that's just the quick down and dirty of reverse mortgages. Now I'd like to talk to our guest here. I have with us Brady Mullen, and Brady and I have been working together, about 6 months or so now?
Yeah,
6 or 7 months. And he has a very interesting take that I've never heard before. I met him on reverse mortgages, and just how he got into the business is really interesting. So, Brady, can you tell us a little bit about yourself and what motivated you to get into the mortgage business and specifically reverse mortgages?
Yeah, so I was a financial advisor and an accountant for 19 years. So my degree's in accounting. I did a lot more financial advising than I did accounting in my career, but I built up a practice, and it was about now 5 years ago or so that I really wanted to integrate real estate advice into the advice that I offered my clients. I'm a big finance geek. I love building models. I love reading prospectuses, and I mean that's kind of nerdy stuff. But I really wanted to integrate real estate into the advice that I offered my clients, not just about real estate investing and bringing that to the table as an option, but also just the real estate choices that we all make, right? So we've built society in a way where real estate in general. So when I say real estate, I'm talking about the industry, not the actual real estate. I'm talking about, what real estate agents do, what lenders do, what title companies do. That's all governed by rules and regulations that determine what they can say, what sort of disclosures need to be created. Anybody who's listening has probably purchased a home before or done a mortgage. There's like a huge stack of papers when that happens. Disclosures that's a big part of life, right?
Uh-huh.
And the financial industry is the same. If you invest in something like an annuity or some kind of fund, this or that, or open an account somewhere at a brokerage account, there's a lot of paperwork to be done because big things are happening, and that's appropriate in general, right? It's appropriate to have those things set in place for whatever, however you feel about that. Either way, some sort of disclosure is appropriate, and some oversight and some rules and regulations. But we've built a system where the real estate industry has its own rules and regulations, and the finance industry has its own rules and regulations. And the problem with that is there's this big, fat, thick line between them where they don't cross over. And the problem with that is that for your life and my life and everybody listening to us right now, and everybody else for that matter, real estate and finance have tons and tons of overlap. The choices that I make about whether I decide to own a home or rent, or whether I decide to upsize, or whether I decide to invest in real estate, or whether I decide to use a reverse mortgage, those all have huge, massive financial impacts or financial influences in my life, and the financial industry won't talk about it because... Now, I say won't talk about it. I want to be clear about this because I believe that there are good people in the finance industry. That's fine. But the degree to which they can talk about it is very limited. I dealt with that personally because I didn't want to sell my practice. I didn't want to leave the industry. I wanted to just add real estate advice to what I was doing. And I just hit roadblock after roadblock and friction after friction on how I could advise my clients on making real estate choices to show them how it affected their wealth one way or the other. And the compliance regulations are what kept me from being able to do that freely. I couldn't help them underwrite investment properties. I couldn't help them project the effect on their wealth for upsizing or downsizing or relocating. That was just stuff the compliance attorneys didn't want me doing. And I was an independent financial advisor. I wasn't working for a big, like a Northwestern Mutual. This isn't nothing against Northwestern Mutual. They have a model where Northwestern Mutual says, hey, this is what we offer our clients. You're an agent. You say this. They call that a captive sales model.
Yep.
And I was an independent advisor. So I could advise my clients whatever I wanted as long as it was compliant. I still had compliance regulation that I had to answer to. And that just became so difficult that I ultimately sold my practice so that I could freely talk about the financial impact that real estate choices had. So my background is all in finance. I wasn't raised in real estate, and I wasn't raised to say this about these kinds of mortgages and that about buying or investing in real estate. I came to that conclusion because I wanted to offer that, and it became a struggle for me to do that in the way that was open and transparent and comprehensive while also running a financial practice.
Wow. So let me ask real quick, which side of the table has more regulation, finance or?
Finance, for sure.
Really?
Yeah.
Okay. Because there's so much in real estate. It's amazing. Or mortgages, especially reverse mortgages. Yeah. I joke with my customers. I say, the reason that we wait 30 days to close your loan after you sign the application is so your hand can rest. Just because there's so many. I mean, I call it elder abuse. That's just, it's terrible how much paperwork there is.
Yeah. So now when you say, like, if you were to say which has more paperwork, well, that might be a toss-up. But either way, like, I might be wrong. Maybe real estate has more, but my anecdotal experience was that finance had more. But regardless, they're both very heavy with regulation.
Yep. And people just have to understand it's a protectionary measure. Yeah,
and it's not perfect, but it's.
No.
But I'm kind of, I'm not overly regulation bent, but I also recognize that there's a place for that. I'm glad that there's somebody regulating Ford to make sure that my truck isn't dangerous to drive because I'd have no way of knowing. So regulation serves a purpose, but either way, it's gotten to a point where real estate and finance are regulated by completely different sets of rules and regulations, and that's a problem for me as a human because all of my real estate choices impact my finances tremendously.
They all overlap.
Yeah.
Is that what makes you so passionate about real estate and reverse mortgages specifically? Is the impact to finances, or is there more to it?
Well, I love it because of the finance, right? That's my shtick. That's what I love doing. I could open a blank Excel spreadsheet and sit there for hours, and I might do that on a Saturday. Like it's
fun stuff.
It's weird. That did happen. The last Saturday I was alone. My wife had something she was going to go, she had been planning on doing with some friends. She left in the morning. and I sat on a spreadsheet all day on my day off and I could have done anything, right? I didn't have to worry about my wife's schedule. She was gone. I was alone, and I was in front of a spreadsheet, and she asked how my day was, and I was like, it was great. I agree, sad, it's weird, Brady. But that's what so I do like the financial aspect. But ultimately, what really makes me passionate about it is I think of like, when I build financial models, whether it's about reverse mortgages or home ownership in general or investing in real estate or upsizing or all these different things that people are faced with all the time. Because as adults, you don't get to opt out of finance or real estate. Those are games you must play because you need shelter. And if you want any kind of sustenance later on in life, you have to figure out at least some base level of financial acumen. Otherwise, you'll run out of resources, right? It's not a game you can say, I don't like finances or I don't like real estate, I'm not going to play.
Yep.
That's not an option. So what makes me passionate about it is that we can build all these fancy models and graphs and put things together, and it's fun for me because it's like a puzzle, but that's not really what makes it passionate for me. What makes it passionate for me is these graphs and charts that we build. They give us a level of predictability on how certain choices will affect people's life from a wealth perspective. And when you really think about what's happening, yes, it's graphs and shapes on graphs and charts and things like that. But ultimately, you're talking about the living standard of a human being on the other end of that graph, right? Mm-hmm. In fact, I had an example. This was a reverse mortgage example recently, actually, where I was talking to a financial advisor, and they said, yeah, we generally don't recommend reverse mortgages because we heard they're bad and blah, blah, blah. And what's funny is financial advisors don't know much about reverse mortgages either, by the way. I mean, you know that, but listeners should know that. Financial advisors, generally speaking, they're not taught anything about reverse mortgages. In fact, until recently, they've been taught to, and it kind of depends on who they work for, but they've been taught to avoid them at all costs. Don't talk about that. Don't email people about it. If you put reverse mortgage in an email, it's going to raise a red flag, and you're going to get a call from the compliance department. It's not that bad anymore at most places, but it used to be that bad. But there's this conversation that I had with two financial advisors, whom I adore, by the way. They're really good financial advisors. They have a really good model, and I like and respect them very much. But they were talking about the last time that they had a client that was considering a reverse mortgage. They eventually backed out of it and didn't do it. And what happened was they were having this family meeting, which is really common with reverse mortgages, right? Yep. The children need to be involved usually, and the children were involved, and one of the sons didn't like the idea. So what they were trying to do was pay off their regular mortgage, their current mortgage. They were trying to retire. They couldn't keep that payment up and still make ends meet. So they were going to use a reverse mortgage so they wouldn't have to make a payment anymore.
Yep.
And one of the sons in the family said, well, you don't want to do that. Here, I'll pay off your mortgage for you. And it was a little over $100,000. Let's just call it 100 for a round number in this conversation. And to me, I'm thinking that's kind of a tragedy, really, because what just happened was, time and money and interest always have a relationship, right? So you might look at a reverse mortgage and say, well, if I don't make payments, it's going to accrue. I don't like the way that feels. But the truth is that happens with money on either side of the table all the time. So what just happened in that scenario was the son sacrificed $100,000 of his wealth so that his parents wouldn't have to make payments on a mortgage. Well, what did he give up? You might say, well, he gave up $100,000. But if he was 45 years old, that money was probably going to double 3 more times before he retired.
Wow.
So he had $800,000 less assets in retirement money by the time he wanted to retire because he helped them do that. And so at the end of the day, it didn't really help them as much as they thought, because he would either have that $800 in his accounts, or he would have inherited more equity in the home because there wouldn't have been a reverse mortgage on it. So you can't look at a reverse mortgage and the equity that someone has in a home in isolation. That's a financial mistake to look at it that way. You have to look at it how it affects all the other finances, because if you're using some asset, or your children are using some asset to get you out of a pinch financially because you don't want to use a reverse mortgage for whatever reason, you have to consider what that asset would have done if you use the reverse mortgage instead, because that's gone.
Exactly. That's an excellent point that so many people don't address, and I don't. Before I met you, I never thought about it. I thought about the negative aspect, how you're losing equity and you're saving money. I would tell people, yes, you're keeping that monthly payment, the principal and interest in your pocket, but I've never heard it put the way you put it there. The cost benefit analysis basically is you're giving up all that money that you would have earned had you used your own other assets for that purpose to pay off the mortgage. And the other thing too is a lot of my customers, I know, well, just I think generally older people, you don't want to be dependent on somebody else. If you're feeling like you're dependent on your kids, that's kind of a bad thing. It's kind of like me. I know when I'm 80 years old or 85 or 90 and my wife says or my kids say, Dad, it's time to give up your driver's license. No, not me. I'm keeping my...
It's time for you to shut your mouth.
Yeah, that's right. Exactly. Because I'm not going to be dependent on anybody. And that's why I couldn't wait to get my driver's license, and I'm going to fight like the third monkey on the ramp to the ark to keep it. so yeah. Well,
yeah, so what you just said, I want to pause on that for a second because you were talking about the family dynamics. I had just spoken about the numbers in that situation.
Yeah.
But what you said is arguably more important. That family is now in a position where the parents just got bailed out by their son, and they didn't need to do that.
Yeah.
Right? He could have kept that money. They could have used their own wealth because it was sitting there in their home.
That's right.
And if that reverse mortgage appreciates at say 7%, but his investment in that $100,000 would have appreciated by 8 or 9%, where it was invested over the next 20 years of his career, it would have actually been financially savvy, which is fine, but it also put them in a position where they had been bailed out with their sons and maybe their grandchildren's, because we don't just think about our children's money, but that money is money that they need to care for our grandchildren, their children.
That's right.
Right. It's not a position that you need to be in when you're living in something, your home, that has legitimate wealth sitting there. You can access that. Another way to think about this is HUD and FHA, which are government entities, right? This is their way. If somebody came to us and they said, hey, Bruce, hey, Brady, we want you to figure out a financial tool that will help people use the equity in their home without having to sell the home and without having to get a traditional mortgage with payments, what would you come up with? And the answer is that's exactly what a reverse mortgage is. People, there's this weird confusion out there that people think you don't own your home when you have a reverse mortgage. That's like saying you don't own your home when you have a mortgage. It's kind of true if you want to say that you don't own it free and clear. I guess there's a lien on it, but you still own the home. You have the title on the home, right? And just like with a traditional mortgage, when you sell the home or when you pass away, that mortgage, the balance will need to be paid just like any other mortgage. Mm-hmm. But it's just strange that people will think you don't own the mortgage. FHA doesn't, that you don't own the home. FHA, they're not trying to take your home. They don't want a bunch of houses on the books. That's political suicide and it's banking suicide. Yeah. Banks don't want to foreclose.
No.
They have no interest in owning your home. The government has set this up in a brilliant way to allow people to use the wealth that's sitting in their home in a very tax efficient manner, which we haven't even talked about yet, right? Using your asset, using that reverse mortgage to subsidize your income in retirement can be significantly more tax effective than using your IRA to do it, because the IRA is taxable upon distribution, whereas accessing cash through your reverse mortgage is not. I mean, there's just all sorts of ways in which people don't look at this properly. They hear some joke about it on Family Guy or some colloquial, cultural TV show or something. But you need to get information and get your questions answered from the right sources, because it's really one of the most overlooked and underappreciated financial tools that I know of. And that's talking with 20 years. I didn't get into this market and learn how to sell reverse mortgages. That's not what I'm doing here. I was literally recommending reverse mortgages for the past 5 or 6 years before I even was in the real estate world.
Yeah. And let's touch on the cause of some of that. We already have a little bit. But before that, you are listening to Reverse Mortgage Radio. I'm your host, Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage in Denver. You can reach me directly at 303-467-7821. 303-467-7821 is my direct line, or you can also visit me online at reversemortgageradio.net. And I've got a consumer guide online that you can download. You can go to my website, download the Reverse Mortgage Consumer Guide. There is a ton of good information in there. Do that, and you can contact me with any specific questions. You can also click in the upper right-hand corner for a Reverse Mortgage Radio show to listen to this podcast next week if you wanted to hear the whole thing, if you missed part of it. So Brady, let's go back, because you kind of touched on it as far as the misconceptions people have about reverse mortgages. I love that scenario where, hey, if you were put in a room and you were to ask these questions about how to help somebody live in their home without having to make a mortgage payment, what would you come up with? And you come up with a reverse mortgage. But what's led to all of this negative perceptions? Why financial advisors couldn't talk about it? Why this son feels like he needs to take $100,000 of his own money and pay off his parents' mortgage so they don't get a reverse mortgage, because that's just bad. What's the background on that a little bit?
Well, gosh, I mean, there's a couple of things. One is just basically, so I've been a solopreneur pretty much my whole life. I like marketing. I like doing my own thing. I like the freedom and the upside potential of that. I've been kind of in that realm. And because of that, I've taken marketing classes on how to write content, how to get the word out there. And it's funny how it's really common. If you hear me say this, you're going to see this everywhere, by the way. It's sort of like when you buy a car, all of a sudden you see it everywhere on the road. Yeah. So I remember somebody was talking to us on how to write headlines. So it could be headlines for, something as traditional as like a newspaper article, or it could be, a post on social media, or it could be the title of a video on YouTube or something like that. So they were talking about how to write headlines, and they said, if you ever stuck, talk about them being lied to, or talk about this, learn this about why you should do this or shouldn't do this. And they basically say negative news sells. Yep. Negative little trinkets get people to watch stuff or read stuff.
Clickbait.
Yeah. So we're in an economy now where, we're all there. We all understand what's happened with social media and with online market. The model for online marketing is essentially the bigger the audience you can build, the more we're going to reward you. It has nothing to do with accuracy of what you're saying, right? So I saw an article, it was a YouTube video from a channel I generally like. The guy interviews very interesting people, and he interviewed a finance guy, and they talked about home ownership a little bit for maybe 10 minutes. We'll call it 10 minutes in a 90-minute interview. But the episode, and he had mentioned some scenarios where it may not make sense to buy a house, but we don't need to get into that now. But the title of the video, which was a 90-minute video, and they talked about this for maybe 10 minutes, probably less, was, "They're lying to you about buying a house," right? And this is just an example. This is a microcosm of something we all experience all the time. You scroll through YouTube videos, and the videos that get the most views are the ones that put headlines like that. Yeah. And so everybody's always wanting to be a whistleblower, or to figure something out that saves people, and hey, don't do this. And it's just the truth that those kind of headlines get more audiences, and we reward that with money. Mm-hmm. So that's what you see when you go online. So I mean, that's probably not the case in all scenarios. That's not where all the negative press has come from about everything. And it's also true that people think that with a reverse mortgage, the bank owns the home. Which isn't true. It's not true about any kind of mortgage. It's a lien on the property. So I mean,
that's true.
I can't say in every scenario where it came from, but those are two pretty big culprits.
Well, if you just think about it, okay, do you say your bank owns your car if you have a loan on your car?
No,
most people don't. Exactly. It's my car. That's my brand new 24 Ford F-150 with all this stuff on it. I'm not a big car guy. I enjoy cars. I like old cars, but that's what people do, and that's my car. But you owe $60,000 on it nowadays. That's kind of crazy.
Yeah, they get expensive.
Yeah, and the thing is too, reverse mortgages have a lot of oversight, right? I mean, they're FHA insured, so FHA makes sure it was kind of set up that way for the Federal Housing Administration. They're also overseen by CFPB. They regulate the people loaning this money, right? And then also too, there was one other thing in your class.
HUD.
HUD.
So, HUD designed it. FHA insures it.
There you go.
And the CFPB oversees it, just like they oversee all sorts of credit-related issues, just to make sure that financiers and they're dealing with the public in a fair way. Mm-hmm. They're incredibly scrutinized and overseen by those entities.
And that's one of the reasons why they're expensive, right? As far as the FHA mortgage insurance.
Yeah. So I think of it,
why people say they're expensive, I should say.
Yeah. So I think of it like if you really want to understand what a reverse mortgage is it's a line of credit. And I think that is news to most people. Most people think it's this mortgage where you don't make any payments, and that can be kind of true, but that's not nearly all the truth. It's a line of credit. It's an open line of credit. So it's probably closer to a HELOC than it is a traditional mortgage. I don't like the term reverse mortgage. I think that implies things that aren't true about it. I use it because everybody else does, but I think it's a bad term for what it is. But it's more like a HELOC where you decide what your payment is. Could you imagine getting a HELOC where I say, hey, if you want to pay interest only, pay interest only. If you want to pay interest in principal, pay interest in principal. If you don't want to make a payment, don't make a payment. Now, obviously, time and money and interest are always going to be related. Yeah. So if you don't make a payment, interest will just accrue. But the payment you make is up to you, anywhere from zero all the way to the whole balance. It's up to you how much you want to pay. So it's the balance that needs to get paid off when you sell your home, or if your children sell your home, if you pass away while you live there. Yeah. But of course, that's true. Just like any other mortgage.
Exactly.
Yeah. So there's a lot of really bad information out there about people that are just trying to get an audience, trying to get some fame on YouTube or something, and they're not licensed to talk about it, or they wouldn't be talking about it the way they do because they make so many mistakes about it. And it is a very viable financial tool. Lots of tax benefits, lots of accessibility, lots of flexibility, and the insurance policy that you're talking about, this fee that people look at and say, wow, real estate or reverse mortgages are expensive. That's an insurance policy that you have to buy if you do a reverse mortgage that keeps it as what's called a non-recourse loan.
Exactly.
Meaning that if you max out the balance and the home values are soft and they don't appreciate, but the balance, if you never make a payment, it's plausible that you could owe more than the house is worth. But if you pass away in that scenario, or even if you don't pass away, you just sell the property, you're not responsible for that difference. That's what that insurance policy pays for, because it has to be sustainable for the financiers. Otherwise, it's not available.
Exactly.
So that's what that pays for.
And people don't understand that these costs help protect your other assets as well, because that mortgage insurance, you're not going to pass that debt, like you said, the non-recourse factor. What happened in 2008, so many people ended up upside down, and a lot of regular people don't understand this, but the banks came back after them with a deficiency judgment. Said, hey, you owe us $50,000 because we lost $50,000 on this home. That cannot happen with a reverse mortgage, and that's what it's paid for. But the thing is, too, it's not out of your pocket. No closing costs with reverse mortgages are out of pocket with us. Now, with other lenders, they will. They'll make you prepay the appraisal. They'll make you prepay the credit report, sometimes an application fee, all kinds of different fees. So I really appreciate you being here, and we're going to talk next week. You're coming back next week to help us out, to learn a little bit about the Reverse for Purchase program, and also, because of your background, I want to get into the weeds a little bit with the financial planning aspect of reverse mortgages, because
I'm going to love that, Bruce.
Yes, exactly. This should be part of everybody's financial plan if they're looking at it strategically and not just come in as a last resort. So please make sure you tune in next week. You've been listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm with Brady Mullen, and we work for American Liberty Mortgage in Denver. You can reach me directly with any questions about reverse mortgages at 303-467-7821, 303-467-7821, or visit me online at reversemortgageradio.net. And this podcast will be up on my website next week if you missed any of it and want to hear. But definitely tune in next week as well. Look forward to seeing you.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.